Assalamu alaikum. Dear students, let's start another lecture relating to, of course, taxation. And I did mention basic lectures you will find same in ATX and tax. Okay. I gave this question in the previous class as homework, and I believe that you people have attempted. Let's see what is your answer. So let's solve it. We have employment. Let me take out the glasses. Okay. We have employment income, which is the non-saving income. Employment income. Employment income is how much? 60,000. Saving income is 15. Dividend income is 5,000. Here comes your total income, net income, which is 80,000. Okay. Let me deduct the personal allowance 12570. And you people are studying Finance Act 2023. Never forget that. Taxable income. Let me use the calculator. 80,000 minus 12570. I'm getting 67,430. So to be very honest, by looking at 67,430, we can easily decide that this individual is a higher taxpayer because the taxable income is more than the basic rate band limit, which is 37,700. And whoever is a higher rate taxpayer gets nil rate band for the saving income 500. When it comes to dividend income, irrespective of individual's tax paying status, everyone gets nil rate band of £1,000. Previously in Finance Act 2022, and it used to be 2,000, but now in Finance Act 2023, it is 1,000. So nil rate band of dividend income 1,000 is available irrespective of individual's tax paying status. Now let's calculate income tax with non-saving. Non-saving income. The second column is for the saving income. Third is dividend income. Fourth, we have total. Non-saving income, which is employment income, it is 60,000. Saving is 15. Dividend income is 5. So the total is 80,000. Personal allowance 12570. Excuse me. Here comes the taxable income. 60,000 minus 12570. Taxable income is 47,430. Saving income is 15. Dividend income is 5,000. So I'm getting obviously the 67,430. When it comes to applying the tax rate, first we know that we apply tax rate on non-saving income, then saving, and finally we go for dividend income. Income tax. Non-saving, obviously. 37,700. The taxable income in the column of non-saving is far more than basic rate band. So entire basic rate band is consumed by the non-saving income. This is 7540. Now what do you have to do? Your taxable income in the column of non-saving is 47,430. From this 47,430, you need to deduct 37,700. So from 47,430, when I deduct 37,700, I'm getting 9,730. So what I did, I have deducted 37,700 from this 47,430. I got the answer 9,730. Logically, this 9,730 falls in high rate band, where applicable tax rate is 40%. Again, right now we are on non-saving income, obviously. 9,730, applicable tax rate is 40%. Let me take 40% of this. 3892. Okay, now what? Now, obviously, we have to move towards saving income, interest income, as we have already decided. By looking at the taxable income of 67,430, we have already decided this individual is a higher rate taxpayer. Whoever is a higher rate taxpayer gets nil rate band of 500 for the saving income. Nil rate band, saving income, that is 500. Applicable tax rate is 0% and 0. So the saving income is 15,000. Out of 15,500 we have taken in nil rate band. So the remaining amount for the saving income is 14,500. We don't have any space in basic rate band. Basic rate band is already utilized. So whatever amount is left in the saving income after deducting 500 of nil rate band, which is 14,500, obviously it falls in higher rate band. It falls in higher rate band. Again, the saving income, now we are talking about higher rate band, 14,500 into 40%. 14,500 into 40%, I'm getting 5,800. Now, obviously, we'll go towards dividend income. And I mentioned many times, let's mention once again. When it comes to dividend income, irrespective of individual's tax paying status, every individual gets nil rate band of 1,000. So nil rate band, dividend income, 1,000 into 0% is obviously 0. So just a minute. Thing went wrong. Okay, it's corrected. Something went wrong with the camera. I don't know what was that. Okay, so nil rate band for the dividend income is 1,000 irrespective of individual's tax paying status. And for the dividend income, whatever dividend income falls in high rate band, applicable tax rate is 33.75%, and these tax rate will be given to you. Don't worry at all. So dividend income, 4,000 of the dividend income falls in high rate band, which is applicable tax rate is 33.75%. So 4,000 into 3375, 1350. 7540 plus 3892 plus 5,800 plus 1350. I'm getting 18,580. This is the income tax liability. What is the amount of the pay? Pay is 4,000. The tax which you have already, this individual has already paid in advance is 4,000. Let's deduct pay. Pay as you earn, which is 4,000. So 18,582 minus 4,000. 14,582. Oh. That is income tax payable. My bad. Income tax payable. So income tax payable is 14,582. Now let's see another question. Okay. Before going towards another question, let me introduce a new concept. What is the name of that new concept? Let me tell you. The name of the new concept is adjusted net income. Now, what is this adjusted net income? How we utilize this adjusted net income before coming to this, and what is the format of adjusted net income? Before just coming to this adjusted net income, let me tell you one thing. There is one concept, the name of the concept is personal pension contribution. Little bit personal pension contribution you need to understand so that you should be able to have a really good understanding on this adjusted net income. Now, what is this personal pension contribution? Basically, in UK and countries like that and other countries also, I strongly believe majority of the people are worried about their retirement life. So what do? They normally take insurance policies. And also their taxation authorities, they encourage them to take such policies. So in our syllabus, there are two insurance policies. One is occupational pension plan, another is personal pension plan. Right now, we're just discussing personal pension plan. You just need to know few things relating to personal pension plan. Right now, just one point. What is that? Personal pension scheme. For example, let's say individual has taken an insurance policy for himself or herself. That is personal pension scheme. Okay. Now listen. According to UK Taxation Authority, which is HMRC. If someone contributes in personal pension scheme, whatever that individual contributes, it is treated as 80%. And logically, 20% is paid by HMRC. That's a benefit. Because you are contributing in the pension fund, so whatever you're contributing, it is 80%. 20% someone else is contributing on your behalf. So eventually in the pension fund, for example, just an example, let's say you have contributed £100 into the pension scheme, but logically, it will be £20 will be paid by HMRC. So logically, the funds for you in the insurance will be 120, even though your contribution is only £100. I'm just giving you the example, okay? So whatever you are paying, it is actually 80%. If you go 100% mathematically, then if you're paying £100, then £25 will be paid by HMRC. So you just need to know few things. Number one, individual contribution is taken as 80%. And 20% is paid by HMRC. That is UK's taxation authority. Second, basic rate band higher rate band. Both limits will increase. We know that basic rate band ends at 37,700. Higher rate band in Finance Act 2023 ends at 1,25,140. These limits will be increased by gross personal pension contribution. These limits will be increased by gross personal pension contribution. Third, your adjusted net income will be reduced by gross PPC. Now you might be thinking, sir, what is adjusted net income? I don't know. You will come to know. Don't worry at all, inshallah. And how come it is a benefit that I'm contributing in per PPC, personal pension, and gross PPC is reducing adjusted net income? How come it is a benefit? I would say just one thing. Wait for that, and you will come to know, inshallah, how it is a benefit and why it is a benefit. Just wait. Right now, you need to know three things. Whatever individual is contributing in PPC, it is 80%, 20% is paid by HMRC. Second, basic and high rate band limits will be increased by gross PPC. And third and the last, adjusted net income will be reduced by gross PPC. Now let's discuss how come it is a benefit. It will reduce adjusted net income by gross PPC. Let's see that. What is the format of calculating adjusted net income? Adjusted net income. First, let us see the format of calculating adjusted net income, and then we will discuss what is the benefit of, in fact, calculating adjusted net income. So you need to know two things. One, how do we calculate adjusted net income? Second, let's say you and me, we both have calculated adjusted net income. The next question is, what is the benefit of calculating this adjusted net income? Also, what is the benefit of knowing what is the adjusted net income? Just wait. How do we calculate adjusted net income? First, we have to take the net income, whatever it is, less gross personal pension contribution, less gross gift aid donation. Now listen. Gross gift aid donation works exactly same like PPC. Means whatever you have contributed, it is 80%, 20%. Donation is paid by HMRC. Your basic and high rate band, both limit will increase by gross PPC, and adjusted net income reduces by gross PPC. But the concept of gross PPC is taxable only in taxation. It is not taxable in ATX. In ATX, we only have gross PPC. Okay. Net income deduct, let us minus gross PPC minus gross gifted donation. So whatever comes, that is called adjusted net income. Question remains same. What is the benefit of knowing this adjusted net income? Now the benefit comes. Actually, in UK, in a very first class, we did discuss every individual is not supposed to pay tax. Only those individuals will be paying tax, and they are liable to pay tax. They have income more than the personal allowance. And the personal allowance, obviously, for the Finance Act 2023, it is 12,570. So whoever is having income more than 12,570, so that excess amount is taxable. But hold on. UK taxation authorities technically giving personal allowance means this is some sort of an incentive that if you are generating less than that, don't pay the tax. Even you are generating 20,000, 30,000, 40,000. First deduct the personal allowance 12570. Just pay the tax which is over and above the personal allowance. But logically, there would be so many individuals in UK, they are very rich. So HMRC, they make sure that very rich people should not be getting the benefit of this personal allowance. So the question is how to stop those very rich people, people with a really big pocket, very wealthy people, how to stop them not to get the benefit from the personal allowance. So HMRC come up with a solution. The solution is if adjusted net income is more than 1 lakh, then personal allowance reduces. If adjusted net income is more than 1 lakh, then personal allowance reduces. For example, let's just an example, okay? If adjusted net income is 1,20,000, you just need to tell us what personal allowance would be available. If someone is having, let's say, adjusted net income 1,20,000, as we just discussed, if you're having adjusted net income more than 1 lakh, then your personal allowance will reduce. Now, here is a question in front of you. There's an individual having adjusted net income 1,20,000, and he wants to know how much personal allowance this individual is entitled to. Very simple. The limit of normal personal allowance is 12570 less the reduction. Adjusted net income minus 1 lakh into 1 upon 2. If I apply this formula, 1,20,000 minus 1 lakh 1 upon 2, I'm getting 10,000. It means I'm left with 2570. So this individual will not be able to get a personal allowance of 12570. This individual will get the personal allowance of 2570. Which means that if adjusted net income is more than equal to 1,25,140, then personal allowance becomes 0. If someone is having adjusted net income 1,25,140, then personal allowance becomes 0. So it means that how come it is a benefit that gross PPC is deducted while calculating adjusted net income? Now, there's a possibility someone is having a net income more than 1 lakh, but he has contributed due to gross PPC contribution. His adjusted net income is less than 1 lakh. So since, let's say, if due to gross PPC, his adjusted net income is less than 1 lakh, then personal allowance will not be reduced. So logically, gross PPC gives you 3 benefits. One, whatever you are contributing, it is 80%, 20% is paid by HMRC. Second, your basic and high rate band limits will increase by with a gross amount. Third, gross PPC reduces your adjusted net income. Okay. And just let me tell you one thing. It's not Ramzan, okay? The recording which I'm doing, it is far more before the Ramzan. So you should not be pleased. So it's not Ramzan. If someone is fasting and that person has seen me while drinking water, so apologies in advance. Sorry. Okay, adjusted net income is if more than 1 lakh, then personal allowance reduces. This is the formula. Now let's see one question. Employment income is 70,000. Saving income is 20,000. Dividend income is 25,000. Required is income tax liability. You just need to calculate income tax liability. This is the only information. Okay, let's try. Employment income 70. Saving income is 20. Dividend income is 25. Let's do the total. I'm getting 1,15,000. So since in this question there is no personal pension contribution, if there is no personal pension contribution, if there is no gifted donation, then whatever is your net income, the same amount works as adjusted net income. Why? There is no contribution in the personal pension scheme. So here comes your net income, which is also the adjusted net income because we don't have any gross PPC contribution in this question. We don't have any gross gifted. So whatever is the net income, that is treated as adjusted net income. Since this is more than 1 lakh, so the entire personal allowance 12570 will not be available. Less than that is available to this individual. Personal allowance, let's see, working one, how much personal allowance is available? Working one. Normally the personal allowance limit is 12570. Due to the reduction, 1,15,000 minus 1 lakh, then 1/2. So 12,570 minus 7,500. I'm getting personal allowance 5070. One lakh 15,000 minus 5070. The taxable income is 1,09,930. Now let's calculate the tax. Non-saving income. Saving income. Dividend income and total. Non-saving income is 70,000. Saving income is 20. Dividend income is 25. Total is obviously 1,15,000. Personal allowance, we know that is only 5070. Taxable income. 70,000 minus 5070. It is 64,930. 20,000. 25. Obviously, by looking at 1 lakh taxable income of 1,09,930, we can say that this individual is a higher taxpayer. Since this individual is a higher taxpayer, then gets nil rate band of 500 for the saving income tax. Obviously, first we have to tax non-saving income, basic rate band, non-saving, 37,700 into 20%. It is 7,540. Higher rate band, 64,930 minus 37,700. I'm getting 27,230 into 40%. 10,892. Now saving income, nil rate band. Saving income it is 500. Applicable tax rate is 0% zero. So saving income, total saving income is 20,000. Out of that 2,500 we have taken nil rate band. So remaining amount is 19,500, which actually falls obviously in higher rate band because basic rate band is already fully utilized. Applicable tax rate is 40%. Applicable tax rate is 40%. Okay, now let's go towards dividend income. When it comes to dividend income, irrespective of individual's tax paying status, every individual gets nil rate band of 1,000. The total dividend income is 25,000. Out of 25, 1,000 we have taken in nil rate band. So the remaining is 24, which falls as obviously in higher rate band. Applicable tax rate is 33.75%. That is 8,100. Here comes your income tax liability. $7,540 plus 10,892 plus 7,800 plus 81,000. I'm getting 34,332. Income tax liability which I'm getting is 34,330. Now let's see one more question. Employment income is, let's say, 80,000. Saving income is, let's say, 50. Dividend income is, let's say, 20,000. So this is the only information. Employment income is 80,000, saving income is 50, dividend income is 20. Requirement is income tax liability. Now listen, you can directly see the, okay, let me show you. We do not have any pension contribution in this question, okay? Employment income is 80,000. Saving income is interest income, which is 50. Your net income is 1,50,000. Great. It is 1,50,000, and you can see in the question there is no personal pension contribution, which means that there is no difference between net income and adjusted net income. It's the same thing. Which means that since your adjusted net income is more than 1,25,140, so the personal allowance will be 0. Personal allowance cannot be negative. So personal allowance would be 0. In the bracket, you have to show adjusted net income is more than 1,25,140. That is where the personal allowance is 0. So net income becomes the taxable income, which is 1,50,000. Obviously, first we have to tax non-saving, then saving, and finally dividend. Non-saving, saving income, dividend income, and total. Employment income is 80. Saving is 50. Dividend income is 20. Altogether 1,50,000. There is no personal allowance because adjusted net income is more than 1,25,140. So personal allowance is 0. The same amount becomes your taxable income. Now let's apply the tax rate. Basic rate band, non-saving, 37,700 into 20%, I'll get 7,540. So the taxable income in the column of non-saving is 80. Out of that 37,700, we have applied the tax. So base, let us deduct 37,700 from this 80,000. Applicable tax rate is 40%. 16,920. Now the question comes. Now look at this. By looking at 1,50,000, we can easily decide this individual is an additional rate taxpayer. I think this is the first question on additional rate tax. This individual is an additional rate taxpayer, and whoever is an additional rate taxpayer gets nil rate band 0 for the saving income. Dividend income, no issue at all. But when it comes to saving income, this individual in this question is not getting any nil rate band for the saving income. Why? Because this individual is an additional rate taxpayer. How did I decide? By looking at 1,50,000. We obviously 150 is exceeding the higher rate band limit. So this individual is an additional rate taxpayer, and whoever is an additional rate taxpayer gets nil rate band. For the saving income, 0, no nil rate band. Okay. Now let's see how much space is left in higher rate band. Actually, the higher rate band limit is 1,25,140. And we have already used 80,000 in the non-saving column. 1,25,140 minus 80. So the remaining limit for the higher rate band is only 45,140. The total limit for the higher rate band is 1,25,140. 80,000 is already used. So the remaining limit in the higher rate band is 45,140. Saving income is 50. Out of that 50, 45,140 comes in higher rate band where applicable tax rate is 40%. Now from 50,000, if I deduct 45,140, whatever comes, that falls in additional rate band. additional rate saving income. So 50,000 minus 45140. I'm getting 4860. Applicable tax rate is 45%. Applicable tax rate is 45%. Okay. Now, dividend income. When it comes to dividend income, irrespective of individual's tax paying status, every individual gets nil rate band of 1000. So, nil rate band, dividend income 1000 into 0% is 0. There's no limit in high rate band. Now, only additional rate is applicable on the dividend income. So, dividend income amount is 20,000. Out of this 1,000 we have taken in nil rate band, the remaining is 19,000, which falls in higher rate band, where applicable tax rate is 39.35%. Additional rate 39.35%. And these rate, again, I'm telling you again and again, will be given to you in exam. 19,000, 39.35. We are getting 7,476.5. Let's make it 7,477. 7540 plus 16920 plus 18056 plus 2187 plus 747. I'm getting 52,180. Income tax liability. Let me just recheck. 7540 16920 18056 2187 plus 7477. Yes, correct. Okay. Now, let me tell you one thing. Basically, in ATX, there's one rule which is not in taxation. What is that? Actually, the normal sequence of allocating personal allowance, allocation of non-saving, saving income, and dividend. The normal sequence of allocating the personal allowance is number one is non-saving. If still personal allowance is left, go for the saving income. Still personal allowance is left, go for the dividend. So the normal sequence of allocating the personal allowance is number one is non-saving, number two is saving, and number three is dividend income. If you come across a question, let's say where after deducting personal allowance from the non-saving, still personal allowance is left, go for the saving. Still, if it is left, go for the dividend income. This is the normal sequence of allocating the personal allowance. But now listen. The concept, the rule is according to HMRC. According to HMRC, you can change the allocation of personal allowance provided that it would be beneficial for you. It would be beneficial for you means at the end of the day, you will save the tax, then it's okay. Otherwise, do not change the sequence. Repeat. According to HMRC, you can change the allocation of personal allowance as far as it is beneficial for you. So what is the another not so common personal allowance allocation? This is A, which is common. B is not so common. Number one is non-saving. Two is going to be dividend, and third is going to be saving. Now, obviously, there's only one question, sir. How would I know? When do I need to go for not so common personal allowance allocation? Very simple. Let's see a question. non-saving, saving income, dividend income in total. Let's say the non-saving income is 10,000. Saving income is 5 and dividend income is 20. Altogether, I'm getting 35. Now listen. Personal allowance, obviously, number one is 10,000. Now listen. We still have personal allowance of 2570. If you deduct the remaining personal allowance from the saving income, logically, there will be no tax benefit. Why? Look at this. Non-saving column is having taxable income 0. Non-saving income column is having taxable income 0, which means that entire starting rate band for the saving income is available. And look at the amount. Saving income is having only 5,000. If the saving income is only 5,000, which means that entire 5,000 falls in starting rate band where applicable tax rate is 0%. So logically, you are already not paying any tax on this 5,000. So deducting the remaining personal allowance from the saving income means eventually you are not going to save any tax because you are already not paying any tax on this 5,000. Why? Because entire 5,000 actually falls in starting rate band where applicable tax rate is 0%. So the situation where entire saving income simply falls in a starting rate band, then do not deduct the remaining personal allowance from the saving income, then deduct the remaining personal allowance from the dividend income, which is 2570. So 20,000 minus 2570, 17,430. 22,430. Now, when it comes to applying the tax rate, first we have to apply tax rate on non-saving income, but there is no non-saving income, so I'll go for saving and then dividend. Income tax. Entire 5,000 of saving income falls in starting rate band. Saving income. Starting rate band, saving income 0%. Now, dividend, we know that nil rate band 1,000 is available. So the dividend income taxable is 17,430. Out of this 17,430, 1,000 we have taken nil rate band. So remaining obviously falls in basic rate band. We have too much limit in the basic rate band because look at this, total taxable income is just 22,430, which means basic rate band is not fully utilized in this question. So that is why basic rate band, dividend income. When it comes to dividend income, irrespective of individual's tax paying status, every individual gets nil rate band of 1,000. In case of basic rate band for the dividend income, tax rate is 8.75%, and these tax rate will be given to you. So 16,430 into 8.75%. How did I get this 16,430? Taxable dividend income is 17,430. 1,000 we have taken nil rate band. So remaining is obviously in basic rate band. 16,430. Just a minute, 16,430. I'm getting 1,437.625, so make it 1,438. Okay. So you can see this. So all you need is just, you need to remember one point, that is, whenever whenever entire saving income falls in starting rate band, just change the sequence. Now listen, if someone has not changed the sequence in this question, let's see then what would be the income tax payable. Repeat, if I'm not changing, if I'm not going towards not so common allocation of personal allowance technique, if I follow the common personal allowance allocation, then what would be the income tax liability? Let's see. For the sake of clarity, I'm doing this, but in exam, whenever you come across a scenario where the entire saving income falls in starting rate band, go for the personal allowance allocation, which is not so common. Okay. Non-saving, saving and dividend. It is 10, it is 5, it is 20. Let's say if someone goes with the normal personal allowance sequence, which is 1000. If I deduct 2570, so 5000 minus 2570, I'm getting 2430. It is 20. Obviously, the entire 2430 falls in a starting rate band because taxable income in the column of non-saving is 0. So 2430 starting rate band is 0% and 0. That's it. No starting rate band is available to the dividend income. For dividend income, there's only nil rate band. This is starting rate band. This is 1000 into 0% is 0. Now, dividend income is 20. Out of 21,000, you have taken nil rate band. So the remaining 19,000 falls in basic rate band. Applicable tax rate is 8.75%. Let's see what happens. I'm getting 1662.5, make it 63. So you can see this. If you're not changing the allocation, you will end up by paying more tax. So I hope now it is proof that changing the personal allowance is beneficial. Now listen, only this area, how much? Only actually this area relates to only ATX, does not relate to tax. It only belongs to ATX because you will not find this in your taxation bill. So inshallah, in the next class, we'll be doing a little bit more discussion and calculation on income tax liabilities, and then slowly and gradually, we'll start our first topic very soon. That is going to be employment, that is going to be rental income. Another name is property income. So first, we'll be doing a little bit more basic things, and then we are going to start our first topic, inshallah. So thank you very much and have a nice life.